Hello everyone, welcome to this week's weekly market view for Monday the 2nd of Jan to Friday the 6th of Jan 2023. My name is Vishal. Let's get started. Alright, let's get started with the Nifty chart, and as you can clearly see, this is the monthly chart of the Nifty. Prices have closed a little bit bearish in the month of December, but we are seeing to get a little bit of a bounce at the start of the month. And January being the new year, let us see how this candle now phases out during the entire month of Jan. For the time being right now, you've got to be a little aware of this area of demand over here where prices have taken a little bit of a halt, 17,750 area, and prices are bouncing and again trying to inch towards the all-time highs. So for the time being right now on the monthly chart, it's going to be very, very crucial for the all-time high to break and then markets to again probably consolidate and continue its move to the upside. So right now we are going to be carefully watching this area over here, and we might tend to see a little bit of a consolidation with a slight move to the upside. At least that is what the demand supply equation is telling us. If you look at the weekly chart, we saw a clear bounce out of this weekly demand zone, and this demand zone has been playing out pretty well, which was identified in the last or many other weekly review sessions of ours. And here you can see how this demand zone is still playing out. We do see a little bit of obstruction at the top over here, but that is more or less about the supply zone being created on the daily chart. So we'll move to the daily chart in a short while, but this is what we are seeing right now on the weekly chart, how the prices are being held into this level of demand, and prices have started to inch again to the upside. Let's move on to the daily chart now. So here we are on the daily chart. Prices came in, filled the gap. Now we did create a little bit of a bearish candle, then we created a bullish candle, then we had a retest, and now we are slowly and steadily trying to consolidate and move to the upside. Now the one obstruction that we want to keep a close watch is that we have this area of supply. It has been tested once, so it will be interesting to see whether the price holds onto this level of supply, or then the prices go a little bit more deeper and then the prices turn down. So what we can expect to see in the coming days is we can expect to see the markets moving again up into this area of supply and starting to move down again to test this area. This is one scenario, and in case if the markets do create a strong momentum, then we might also see a potential new area of demand being created here, something like a rally base rally, and then any kind of pullback into this area might lead to closer to the all-time highs or even this gap supply zone here, right? So these are the possible scenarios. Let's see what happens. We have to just wait and watch cautiously as the market plays out. It's all about price action. It's all about demand and supply at the end of the day. But currently the markets are trading in the positive territory at 18,184 odd levels, and we are coming closer to the daily supply again. All right, so let's see what could happen in the coming few trading sessions. If we apply our options chart here, so let's quickly do that, and let's go to quickly do that. And let's quickly see the options volatility for the month of Jan. And if I just move my cursor, we can see that there has been a little bit of a spike in the premiums, and the current implied volatility based on Friday's close is suggesting that the volatility was 11.87, and since then there has been a spike in volatility. So what does this mean as an options trader? This means that the options premiums are steadily becoming more and more expensive. So as an options buyer, when premiums rise and when the premiums become more expensive, it's good for the options buyer but not good for the options seller. So right now the current environment is that we are more or less hoping that this volatility will probably start to increase slowly, and markets might tend to move slightly in a consolidated manner, or if they hit supply, we might see a strong reaction coming from supply. If we do break this supply zone, then the markets will again head to this all-time high. So these are the two areas and that we need to be watchful in the coming trading sessions, at least based on the daily chart. Let's now move on to the 60-minute chart. So I'll just change the time frame here. We can go to the 75 minutes also. And this is where we are on the overall equation of demand and supply. Now we do see a little bit of a drop-based drop. Now this could be a little bit of a temporary pause in the market, but because there is so much of trading over here, we want to see a little bit of cleaner levels. So one area that I would also probably look out for is just a little bit above this area, which is this 18,500 zone. Reason I have chosen this level is also coinciding with the round number 18,500, and we all know that institutions love round numbers. So this is an area to watch out for in case if you are doing swing or positional trading. Then what we are expecting that the prices might do is, if they do happen to come and retest this area, we might see prices again falling down from this area. All right, let's now move on to the Bank Nifty. Let us see what picture the Bank Nifty is forming for us. Okay, so let me remove all the tools and let's start clean from scratch. All right, so here we are on the Bank Nifty chart, and as you can clearly see that we are again more or less consolidating. As I've always mentioned, the Bank Nifty has been the stronger of the broader markets than the Nifty and the Sensex overall. But this is the Bank Nifty picture. We have a monthly demand zone. The demand zone is still far away. Markets are consolidating here, so we'll quickly go to the weekly chart and we will see whether there is any kind of demand zone to which prices are reacting from. And indeed, this was also the level that was identified on the Bank Nifty. Prices are holding on to this level. If you can just mark it wick to wick, it shows a clear touch of the level and prices are moving to the upside. Now we do have a little bit of obstruction over here, but this can just be a little bit of a temporary phase where markets might tend to move into a consolidation. Let's move on to the daily chart to see if there is any clear level to watch out for. So we'll remove this. Now if you look at this entire area of demand, the prices, okay, so this is that area for which Bank Nifty is actually more or less struggling at the moment here, and finding it a little difficult to break this area, right? So we are in that daily supply zone. So demand zone is a little bit far away from current market price. In case if the prices do give a sell-off from this area, we might see the markets again coming and retesting this area. So what we are expected to see during this week is we are expecting the markets to be a little bit range bound between 43,100 to 43,717, and to the downside we have 41,700 to 40,789. If we look at the volatility at the bottom, we see that the option premiums are slightly rising, and generally this tends to happen when there is a little bit of panic in the market, or markets are more or less expected to fall down a little bit drastically. So this is the time when we see the volatility picking up. Now we are in supply, so we need to be a little careful, and although this is a daily supply, it is still a supply from where the prices have reacted very, very strongly. So just be careful. Any long traders over here, just be careful with your longs, because any longs over here will be considered to be very, very aggressive. Alright, let's move on to the USD INR now, and let's mark some key important levels on the USD INR. Alright, so on the monthly chart, the USD INR is just consolidating, doing nothing much. For 3 months it has just been consolidating between this range here. Now if the markets do come down and do correct within this area, then we are expecting the markets to bounce up. So generally the equation between the USD INR and the Nifty is generally when the USD INR, this is the Nifty. So generally when the USD INR continues to move up, we expect Nifty, Bank Nifty, Sensex to move down, and whenever the USD INR tends to move down, then we expect Nifty, Bank Nifty and the Sensex to move to the upside. So it'll be interesting to closely watch this scenario to see what is going to happen based on the monthly chart. Let's move on to the weekly chart of the USD INR. On the weekly chart, for weeks together, we are just consolidating in this weekly supply. Now generally USD INR is a considerably slow mover than the Nifty and the Bank Nifty. So you might wonder that for weeks together the prices has barely moved. That doesn't mean that it will not give a significant move later on, right? So this could be a potential sign of distribution by the institutions. And what does distribution mean? It means that potentially they are creating orders in supply so that the market or the USD INR is more or less likely to fall down. Now I could be wrong with my analysis, because ultimately market is always right. But whenever the prices are doing any kind of consolidation into supply, is also that institutions are building positions, and because we are in supply, we are expecting that the markets should more or less fall down. Okay, so that is our basic expectation. Let us see whether that happens in the coming days on the USD INR, which will be actually a positive sign for our markets, which means our markets will continue to rise in case of USD INR falling down. This is the daily chart of the USD INR, and not very clear levels on the daily chart, but we do see this gap level here. So maybe we can just go to a smaller time frame to just see if there is any level of demand here. There should be something. We'll go to the 30 minutes or the 60-minute chart to identify this level over here. If you look at the volatility chart at the bottom, we are right now in zone 3, which means the premiums are neither inflated or neither deflated. So if you are a non-directional trader, then this is an ideal situation for you to plan some kind of non-directional option strategies on the USD INR, if obviously your view is non-directional. Let's go to a smaller time frame chart, and the level that I was more or less keen to look at. Let's go to the 60-minute chart. We'll also go back to the 30-minute just to double check. So yeah, we do have this this area of demand over here. In fact, we have this nice base rally, which is slightly below this gap level. So I will also include this gap level, because many times USD INR reacts very, very strongly to gap levels. Now ideally we are in a potential momentum to the upside, right? So any kind of pullback towards this level will possibly take the markets up again, right? And let's keep a close watch on this supply zone as well, which is this very, very extreme of the, I guess this is the all-time high on the USD INR. All right, so these are your closest demand zones and supply zones on the USD INR. So this week we are going to be closely looking at two cement stocks, and we are going to primarily be looking at ACC, and we'll also have a look at Ambuja Cements, right? And let's identify some key zones from where we could expect to see the prices turning. All right, so there are zones already plotted over here. I'm just going to and let's first and foremost go to the ACC 240-minute chart. So this is the 4-hour chart on ACC, and based on the 4-hour chart we can see that this area of supply from where the prices have given a nice fall, and they have removed all this area of demand, right? Now we do have overhead supply over here, so these are more or less tested areas. Can price get there? Surely yes. And can price again turn from those areas? Surely yes. So the area that I'm looking forward is, I'm just going to go back to 125 just to fine tune this, to check. Yeah, so this is your supply zone, and this is 2540 to 2579. If we just probably take it down to 240 minutes chart once again, this is going to be your area. So just keep a close watch on this. In case if you are okay to take a little bit of more risk, then you can also mark your zone in this way. This will just make your risk taking appetite a little higher, but this is how you can also plot the zone, right? So 2511 to 2577 will be an area to watch out for on ACC, and when prices come here, we are expecting the prices to hit this supply zone and start falling down towards this area of demand, right? So this is something to watch out for. Can the reverse also happen? Can we expect the prices to go down first and then the prices to move to the upside? Surely yes. In that case, if the prices do come into this area, we can expect to see a bounce coming on the ACC stock as well. All right, let's look at the next stock, which is Ambuja Cements, and let's gauge from the higher time frames. So let's remove all the tools. On the monthly chart, Ambuja has just been consolidating. On the weekly, we can see that Ambuja is just probably trying to rotate and trying to move to the upside. And there are some areas of supply here. So let's go to the daily chart first. So this is going to be a key area, and ideally what we would expect is, we would expect the prices to try and break these lows, because then the path of least resistance is more or less to the downside, right? But this is an area 553 to 570, and this will be more of a swing level or a positional level on Ambuja, and this is based on the daily chart. If you want to just simply go and fine tune this level, then you can possibly go to a, let's say, a 240 minute chart or a 60 minute or a 75 minute chart and try and make your risk a little bit minimal. But yeah, as you can see here, that yeah, so I think this is absolutely fine. There is no need to fine tune this level. It's just okay. And I've gone and seen it on the 30-minute chart as well. Yeah. So we'll stick with the daily level. This is 553 to 570, and if Ambuja does get here eventually, then we might see another fall where prices could come all the way down and retest this area of demand again. Okay, this possibly can be a pretty decent trade setup as well. All right. Okay, so this is it from me for this week. I hope you enjoyed the analysis. We will come up with more analysis on different stocks and different sectors in the upcoming video. Hope you like the video, and if you do like our video, please do hit the subscription button for subscribing to our YouTube channel, which is Sharekhan Education. And in the comment section, feel free to let us know what you like, what would you like to see, and any kind of appreciation is always good for us. Thank you very much. Have a lovely week, and see you all next week. Bye bye.
This should not be treated as a recommendation. Please conduct your own analysis or consult a financial advisor before investing.